Hi guys, good morning and welcome to Moneycontrol. You're watching Opening Bell with me, Nandita Khemka. Very busy Friday ahead, given the fact that we have just about less than an hour to go before we get the RBI rate decision. And this time around, mind you, there's a lot of division, a deep division, so to say. One section of the market believes that the RBI could dole out a 25 basis point rate cut, but there's another section that believes that given the fact that growth is extremely strong, there is no need for a rate cut right at the current juncture, but the RBI should in fact hold that ammunition in its arsenal for a rainy day. But we'll see, we'll find out. Less than an hour to go. Let's see what the governor really doles out for us, but the commentary will be extremely important, especially at a time when the rupee has been hitting record lows and has surpassed that 90 level against the dollar as well, and liquidity has been a little tight in terms of the dollar reserves, because dollars are being sold by the RBI to stem the volatility in the rupee rates as well. So bond markets will be watching out for whether or not the governor announces an open market operation or not to inject liquidity in the system. So yes, that's also another thing that will be watched out for. So yes, just about some time to go, but in terms of our market, we did manage to defend that 26,000 level on the downside. In fact, 20 DMA was defended in the previous session, and yesterday 26,000 we managed to close above that level, so that's one good sign. Banks, real estate, autos, rate sensitives will be in focus today. All these sectors have been on a downward trajectory and have clocked in losses if you look at the week to date picture. But today, of course, we will watch out for how these three sectors particularly behave after the policy announcement. But lots lined up in the next 1 hour. Keep your queries coming in. We will get them addressed as well. Lots of stocks in focus as well. The likes of ITC Hotel, HUL trades ex ice cream business, demerger record date. So that's also something that will be in focus. But before we move any further, quickly take a look at the top stories at this hour. Wall Street ends mixed ahead of Fed's interest rate decision next week. Street awaits personal consumption expenditure data that is due later today. Meanwhile, Asian markets are lower, with the GIFT Nifty indicating a muted start for our markets. Crude prices edge up as Ukrainian strikes on Russian oil infrastructure stall peace negotiations. Gold prices hold steady as rising yields offset dollar weakness. The RBI is set to announce its monetary policy decision later today. 60% of the market participants expect a rate cut, while some expect the central bank to keep ammunition dry after the steep decline in the rupee. Prime Minister Modi receives Russian President Putin at the Palam airport as he arrives for his first state visit since the war in Ukraine. India will be pushing for increasing pharma, agri and textile exports to cut the trade deficit with Russia. 10 intergovernmental agreements and 15 commercial deals likely to be inked. And the Civil Aviation Ministry and DGCA review Indigo's flight disruptions and cancellations. The airline attributes the chaos to planning gaps in implementing the second phase of the revised flight duty time limitations. It says more cancellations are expected for the next 2 to 3 days and seeks time till the 10th of February to fully stabilize operations. This comes after over 500 flights were cancelled yesterday. All right, as I mentioned, we did manage to defend 26,000 level on a closing basis, with both the Sensex and Nifty, snapping out of a 4-day losing streak. Market breadth, however, was in favor of laggards. Market breadth has been a cause of concern. Broader markets have not really been participating in. Yesterday as well, we had the broader market, Nifty mid-cap index, small-cap index, all of them underperforming the benchmarks. TCS, SBI Life, Tech Mahindra, these are some of the top gainers on the Nifty. Defense stocks were in focus and will continue to be in focus because of the Russian president's India visit. A lot of deals, etc. will be signed, so that's one pocket to watch out for. IT stocks, second day in the running that we saw IT stocks do well. Of course, it's the rupee weakness that's boosting sentiment when it comes to the IT stocks. Indigo, as I mentioned, continues to be in focus. Massive chaos, flight disruptions, lots of inconvenience when it comes to the passengers as well. So amid all that, Indigo stock prices have been dipping, and yesterday, of course, it was among the top Nifty laggards. Foreigners were net sellers again. Almost 2,000 crore worth of stocks sold in the cash market, but the DI continues to be buyers. And in terms of the stocks in F&O band, you have Bandhan Bank, new addition, and Samman Capital continues to remain in F&O band. But on that note, let me bring on board our technical guest for today. Joining me is Raja Venkatraman, co-founder, NeoTrader. Raja, lovely chatting with you. Friday and feel good day, so to say, but it's a busy day. We have the RBI to digest before calling it a day. But 26,000 defended on the downside. If at all a rate cut doesn't come by, what do you expect? And if one does come back, do you expect any kind of knee-jerk positive moves on the index?
Yeah, good morning, Nandita. Thank you for inviting me to the show. So, when I take a look at the happenings that have been emerging over the last few days, I see that the last Wednesday rise has to be a very important one. The sharp upside which we saw actually unveiled that a new phase of bullishness is about to emerge, but then that did not transpire. So, the highs of around 26,200 and the lows of around 25,800 would be a key level to watch out for on the indices. And when you take a look at the USD INR depreciation, which has been one of the hottest topics over the last few days, I would say that the RBI is allowing the rupee to mature, because the way things were 10 years ago and now the situation now is very different. And in the RBI in the currency framework, there is something called as an import cover, and the import cover is where the foreign exchange reserves which are there with the RBI to handle the external shocks. So this was the average import cover is around 8 to 10 months, and we were around less than 9 in 2015. But gradually over the last few years, we have seen that the forex reserves have increased considerably from say around 300 plus billion dollars in 2015 to it has gone above around 641 billion dollars in 2025. So RBI has taken efforts to ensure that they have the ammunition to handle the volatility. So we are now having a import cover of 11.5 months. So which is actually saying that we are actually not in a spot of bother. So this is some insights which I have got based on the research, and I find that the rupee weakening should not be so much of a concern. It is helping us get some positive moves in IT, which was a beleaguered sector. We have been discussing for the last few occasions that
Yeah.
the stocks which have not moved so far can be something to watch out for, and IT was one of them which we had discussed. So we can see a strong moves in IT. You spoke about Infi, TCS, Wipro, but I would say that excellent move has come in Hexaware Technologies. So that's also shown a very good move in the last 2 to 3 trading sessions. I would say that now, yes, the IT stocks are moving. Now, if you want to participate in the IT stocks, then look for a dip to buy into. While Bank Nifty and see every index will go through some phases. So now we are seeing that the IT index is playing out. So why not go into the IT sector? So sector rotation is going to be the theme of the future. So one should not hold on to a stock which they had made money few years ago, and hold on to that stock and hope that that stock will give them return. Instead, keep switching, keep moving with the trend, and that's how one will make money. And now coming back to Bank Nifty, I would say that 60,000 is being crossed repeatedly, but the conviction is not seen yet. So I would say that today is a day, you can say as a D day, where Bank Nifty will come to the fore. So I would say 58,000 on the downside is an important support to watch out for in Bank Nifty. 28,000 25,800 in Nifty. So these are the two levels which I'll watch out for before I surrender my bullish bias. Otherwise, every dip is a buying opportunity. Well, it does take some time for the dip to mature, but then one can keep buying on dips and enjoy the rally, because as long as on the Nifty 26,200 we don't get a strong closing, I would not say that we'll see further upward traction. So it's going to be a range bound scenario for in the coming week as well.
Okay, a range bound scenario in the coming week as well. And of course, as you mentioned, after clocking in 60,000, we haven't really been able to stay above that level, and the conviction really is missing. But just about 3 minutes to go for the markets to open. We're looking at a sub 26,000 start. But want to get in your recommendations for our viewers before we come to other stocks and news.
Yeah, I've selected some stocks which had a late session up move, and one of the stocks which I would like to share here is from the capital goods. Siemens is one stock which was beleaguered for a while, and now I'm seeing that strong buying interest is emerging. So I would say buy at around 44.22 with a stop loss at 43.80 for an upward towards 44.90, and also a buy in KEI. All right. KEI buy at 4185, stop loss at 4140, and target at 4235. Pardon, Siemens, the entry level is around 3380. Pardon, 3380. Stop loss
Hmm.
is at 3350, and target is at 3425.
Okay, those are the targets on Siemens, and of course, those were the stocks that Raja is recommending. But let's talk about some of the stocks that will be in focus today. Particularly HUL. It's a record date for the demerger of its ice cream business. It will begin to trade adjusted for the demerger, and this means that those who had shares of HUL in their demat account as of Thursday's closing will be eligible to avail the demerger entitlement. Now, eligible shareholders of HUL will receive one share of the demerged Quality Walls for every one share of HUL that they own. Now, Quality Walls accounts for 3% of HUL's consolidated revenue. The demerged entity will also be temporarily included in the Nifty 50 index from today. Of course, afterwards it will be removed. It's a temporary move. But, earlier HUL had said that ice cream business is between somewhere around 1800 crores to 2000 crores in size with low margins. Now, analysts are expecting Quality Walls to be valued anywhere between 12,000 crore to 15,000 crores, which roughly translates to a value between 50 to 60 rupees per share for HUL. But all these FMCG stocks, very uneven moves, haven't really been able to fire up, despite the fact that some of them reported good volume growth, better than expected volume growth in the second quarter. But for HUL in particular, after this demerger, do you expect any kind of an upside? Do you expect the stock to take off at least, start taking off at least?
Yeah, so I can hear the sadness in your voice of HUL. So HUL continues to remain depressed, and IT stocks, I would say, sorry, FMCG stocks would continue to remain depressed for the next, at least for till the result seasons are out, because I don't see any kind of semblance of recovery here, be it HUL, be it ITC, be it Marico, barring the periodic jump which you see in the FMCG names. The stocks are continue to
Hmm.
remain suppressed, and I would say that it could go through a range bound scenario. And yes, there are some positive news
Hmm.
flows or corporate actions that are coming in, but it is not enough to boost the sentiment here. So I would say that on a rise you would
Hmm.
receive a sell off only. And talk about HUL, from the highs of 2750 to the lows of 2450, so a 300-point decline, which is actually a massive decline in the last 4 to 5 months, and that does not augur well for the prices. So I would say that it would take some time for the prices to mature. And yes, like I always keep saying, there are so many sectors, so many stocks buzzing, so it's best to shift your focus into those names.
Hmm. Okay, best to shift your focus to those names. But let's take stock of the market open. Hold that thought, Raja. We'll talk about more stocks in just a bit. We have started on the back foot, of course. The Nifty still holding on to that 26,000 mark nonetheless. 25, 30 odd points downtick at the start. Sensex down 100. The bank Nifty on the back foot as well, but it's holding on to that 59,200 level. Mid cap index, once again started the day in the red, and the breadth is skewed in favor of the laggards this morning as well. But we'll see how things pan out on that front. Too early to really call it a trend. But in terms of sectoral picture, IT once again taking the lead. No big moves, but still up somewhere around 0.3%. PSU banks, of course, day before yesterday we saw very sharp fall coming in PSU bank index. Yesterday, first half it did see some semblance of recovery, but it gave up towards the end of the session yesterday. Right now, it started the day on a positive note. But we'll have to see how PSU banks really behave, because other factors at play, of course, could be the denial of government in terms of FI limit hike and consolidation plans, etc. That has been weighing in on sentiment. So PSU banks as well in focus. FMCG and real estate managed to stage a good comeback in the second half yesterday, but didn't really see any follow through buying. So both FMCG, real estate in the red once again. Autos also managed to do well in the last half or in the second half, but on the back foot today. Pharma as well in the red. In terms of individual movers, just want to see what's doing well. Shriram Finance, that's the top Nifty gainer, followed by Eternal. Some of these auto names are also doing well, the likes of Maruti, Aisha Motors as well. IT names, of course, feature in the list of gainers, the likes of Wipro, Infosys. You also have the life insurers extending gains. SBI Life, I can see that is emerging as a gainer. So is Kotak Mahindra Bank, despite the weakness in the Nifty Bank Index. The stock is up 0.5%. Bajaj Finserv, that's another one that's doing well. Bajaj Twins, in fact, are doing well. Ultratech Cement is the other one. And BEL is extending its gains from yesterday. Of course, the defense stocks will be in focus, as I had mentioned. Reliance Industries, that's the top Nifty laggard. There's been a rating upgrade on the Reliance Industries. One of the rating agencies has upgraded the stock's rating, but the stock is down somewhere around 0.7%, seeing some bit of profit taking. Metal names are under pressure. Tata Steel, Hindalco. Trend, there is pressure continuing on the prices of Trent, which has come off quite significantly from its 52-week highs, almost halved. Tata Motors private passenger vehicles under pressure. Tata Consumer under pressure. Some banking names like Axis Bank are also on the laggards list. Indigo, of course, continues to edge downwards on the back of all the chaos that's really unfolding across the country. But the Nifty has broken into the green as we speak, 26,000 on the Nifty. So let's 26,043, I beg your pardon. So yes, and Bank Nifty as well. Good recovery from the opening lows. It's back in the green, up 20 points or thereabouts. Any thoughts, Raja, on the likes of a Keynes Tech? I ask because yesterday Keynes Tech saw a very sharp knock, 6% down. The stock has anyway been in a downtrend, but yesterday one of the brokerages, flagged off some concerns over related party transactions, and which, of course, the stock took it on its chin. But Keynes Tech, is it an out-and-out sell right now? What's your reading?
Yeah, the stock has been on a decline in the last two months, and especially the space which it is in, the semiconductor space, it's not been able to. That theme seems to be wearing out, and also when you are looking at the kind of clarifications the company is coming out with, it's not enough to sustain the decline. So I feel that at the current juncture, the stock is undergoing some pressure. Even on higher time frames, it continues to exhibit an exit clause here. So I would say that the holdings definitely should be exited. It is a good candidate for engaging on a short trade. So if you are, so it's there in the FNO segment. So if you are from the trading community, then you can definitely look at it from a shorting perspective.
Okay, look at it from a shorting perspective. That's the call on a Keynes Tech. Indigo, all of us, who plan to take a flight now, of course, would, I don't know, maybe we switch to other airlines. But, on the charts, since the time it has entered Nifty, the stock has been under pressure. I was talking to some fundamental analysts. They were saying that, okay, this is happening, this is playing out, but structurally there is nothing wrong with the stock. On the charts, what are you spotting?
Yeah, see, whenever you're going to take a bet, the one is based on the technicals and other is based on the fundamentals as well. So the fundamentals of the company is also very important. And when you consider the fundamentals of Indigo, everything seems to be fine. So there is nothing much to worry about. And unlike a scenario in Keynes Tech where there were some issues and the prices have started falling, that kind of scenario has not emerged in Indigo, and I don't think it will as well, because their operations are quite robust, and right now, of course, they are going to some technical snafu, but then that's all part of the whole. Even Air India has gone through its share of pain. So now they are going through some, but I feel that the prices could come to a halt right now on the downside, and maybe we'll see a recovery from here. But yes, it is an avoid at the moment, but then there is nothing much to worry about.
Okay, avoid at the moment, but nothing much to worry about. In fact, I can just see in our feed we had queries on Keynes Tech and Indigo both. Hope these queries are have been addressed. I hope that helps you. But let's talk about some of the defense names. Last few days we've been seeing traction, and of course we have Russian president in the country as well. A lot of defense deals could be inked with Russia. Couple of queries on our feed. Naveen wants to know your thoughts on Bharat Electronics, whether it's a good level to enter. Any thoughts on the likes of BDL, BEL, HAL, anything that you like? And especially in terms of BEL, should one take positions now?
See, the overall defense space is going through its share of pain at the moment. So I would say that HL or BEL again, this is going to be a range bound scenario. So I would say that amongst them, I find that Bharat Electronics to be in a much better bet because the stock is able to hold on. Even whatever be the kind of news flow, the stock has been able to hold on over the last 2 months. So it's going through a consolidation phase. So now when you're going to enter a stock into in a consolidation phase, you got to understand that the stock is going to take some time to mature. Like for example, BDL was in a consolidation phase for such a long time until the metal saw strong upside. Now, in the same way, if you're willing to hold on, then from the defense names, I would place my bet on BEL.
BEL, okay. Hope that answers your query, Naveen.
Bharat Electronics.
BEL,
Yeah.
that's the bet. Bharat Electronics, of course, that's the, chartically, I think that's the best poised according to Raja. But Raja, we spoke about the IT stocks, that they have started gaining traction thanks to the, rapid or crazy fall in rupee. There is a pointed query on our feed. It's on Tech Mahindra, whether one should enter into this stock with a 6-month to 1-year perspective. Komal Makecha has a query on that front. Would you prefer a Tech Mahindra or would you vouch for the mid-cap names, the likes of Persistent, Coforge? Because most of the analysts I've spoken to are tilting towards the mid-cap ones.
Right. So, yes, amongst the big names, Tech Mahindra definitely is showing some positive traction here. But I would say that if you're looking to enter an IT name, and Tech Mahindra has seen some run up lately, it will continue to show some upside. But then if you're really looking to take a bet, like I said few minutes ago, like the likes of Hexaware Technology, it is showing some excellent move, and I would say that if you want to enter a stock, then this is a stock I would place my bet on, Hexaware Technology, and the next would be Persistent System.
Okay, Hexaware and Persistent. Those are the two, top stocks that are looking good on the charts for from the IT space. So perhaps you could look at those instead of looking at a Tech Mahindra. But hold that thought, Raja. We'll come back to you in just a bit. Of course, less than an hour to go. In fact, 35 minutes to go when we get the rate decision from the MPC. Of course, this time around, extremely crucial. A lot of mixed signals from the economy, growth strong, record low inflation, and on the other hand, you have rupee complicating things for the RBI governor. Such a rapid fall, we've crossed that 90 level for the first time, and that too on a day when the MPC meet started. So we'll, let's put into perspective what really one can expect. Street is deeply divided. One section says that no, we need a 25 basis points right now itself, and one section says please hold on. Later on when the trade deal comes by and stuff like that, on a rainy day, perhaps you could step in with some support. But what does one really expect? Let me bring on board, Moneycontrol's banking editor Hamsini Karthik, who's right here with me.
Hi.
Hamsini, as I summarized, it's a very, very complicated situation. RBI governor has a tightrope walk in front of him, so to say. What are your polls throwing up, and what do you feel?
Absolutely. In fact, this is one of the times when when we started the whole polling process for MPC, the consensus was in favor of a rate cut. Things dramatically changed within the last 3 days. Now if we go back and talk to some of the economists who polled, they say that do we need a rate cut now? We don't need a rate cut now is the majority stance. But having said that, low inflation always makes a good pitch for a rate cut, and coupled with a very high growth data. In fact, growth data is one which is actually outdoing even RBI's expectations. RBI was projecting in the ballpark of 7.2. We got a number at 8.2. So we have seen data outdo even RBI's performance. It's outdone all the economists' estimates as well. That makes a very strong case in favor of a pause, because when you're growing that fast with whatever the current terminal rate is, why do we need another rate cut? Should we watch out for the dynamics of the environment sort of realigning, as you rightly mentioned about tariffs, etc. From a banking perspective, there's one more headache to think of. Most of the banks were guiding for a normalization in margins, for a normalization in operating profit as well, given where rates are right now at. Do we punch it in with another rate cut and the PNL of banks absorb some near-term shock before they can start stabilizing maybe in FY27? We'll get answers to all of that in less than half an hour. But as you mentioned, the consensus is very mixed. My personal view is that we might see another 25 bips surprise rate cut from the RBI, because that was what was fed into estimates till about the 1st of December. Of course, yes, the way rupee has behaved, although we've had a lot of government officials say that rupee at 90 is not giving them a sleepless night just yet. But that's another factor. More than the monetary policy itself, I think commentary on rupee, commentary on where we see inflation further, because now we've come to a very, very benign base rate, right? So how do
better to roll out a rate cut now than when you have 3% inflation with you, right?
Yes, but 3%, frankly, Nandita, is a level that RBI would still be very comfortable with, because it's much in the bandwidth, right? So these are some of the nuances that we would watch out for in the commentary from Mr. Governor this policy. It will be less about rate, but more about how he's seeing the macro environment. Interestingly enough, he's had a very, very peaceful innings thus far. It's just been the little bit of uncertainty on tariff, which was expected to come through in August. That's taken a little time, longer than what even the RBI was anticipating in terms of certainty. But having said that, everything has played out extremely well in favor of Mr. Malhotra so far, except that rupee started behaving badly all of a sudden.
And now liquidity as well, right? Because then durable liquidity will suffer in the second half.
Yes.
Dollar sales has been happening.
Yes.
Aside of CRR, they haven't really mentioned much about liquidity, as far as I know.
So our team thought is that we might see OMO operations coming into play to handle the liquidity scenario. What that will in turn also do is possibly even spur credit growth, because you're not going to see people really put so much idle money in safe return pockets. Maybe people will start sweating out money more. So that's another thing that we have to watch out for in this MPC, because all said and done, and with benign inflation as well, what happens to growth is a question which we don't have an answer to yet. And once again, we're beginning to see early traces of loan growth, sort of fast pacing or outpacing the growth rate of deposits. That's not a healthy sign, So these are some of the finer aspects we'll have to really look out for. Whether a rate cut or not, I think
messaging gets more.
Messaging is more important to look out than
one more
the
thing. The street is betting on a rate cut by the Fed next week, right?
Yes.
In terms of the rate differentials, would RBI want to let go of the the differential advantage that we have right now?
When I asked this question to an economist of a very large bank a couple of quarters ago, he was telling me that, Hamsini, we've come very far from playing that rate differential game or the catch-up game with the US. So what US does is not a big factor any longer for India. We set our own rules and play by it. But having said that, you can afford to make a statement like this when rupee is behaving to your favor, right? Now it's become, rupee is turning turning largely into an exporter's play. What about the imports that we do, right? So with the uncertainty on rupee increasing, and its estimates are already pegging it at anywhere around 91 and 92 if the fall should continue, maybe in the next 3 months or so, then that won't give us the comfort to say that India will play by its own rules. We might have to, play to the gallery, largely to the US Fed decisions. Usually we've had the Fed coming first and then RBI. This is one of the odd times when RBI is first and then Fed.
Yeah.
So a cut is either way, either now or in February. But we will see another cut, a 25 or a
25 or a 50. Okay.
50. I mean, Mr. Malhotra has been surprising us all along for a year almost. So, who
and of
knows
course, he's
what?
also said there is space, but space means he can wait it out as well, right?
Yes.
Doesn't mean that he has to come out with a rate cut this time itself. Or not.
Yes, absolutely.
All right, got it, Hamsini. We'll have to let you go on that note. We have some guests waiting by. But I'll touch base with you at 10:30 right after the policy, and we'll take stock of what the governor really does. Less than half an hour to go now.
Yes,
Let's
see how we're surprised.
Yeah, let's see what kind of surprises are in store for us on that front. But let's shift base to the equity markets then, see what the Nifty is really doing. We had, come back into the green territory. Yeah, very, very flat, but just about it's like a tug of war between the green and red. Right now we are, somewhere extremely flat at 26,030 level or so. But coming to Raja again, Raja, let's talk about ITC Hotels as well. There was supposed to be a block deal in the counter. Just want to check if that's already taken place or not. But in light of the supply pressure, how would you expect or how would you trade into an ITC hotel today?
Yeah, ITC Hotels continues to, after the demerger, ITC, this particular stock has been under continuous pressure. And I would say that it will remain this way, and I don't think there is any scope of recovery here. So I would not be looking at it from an investment perspective.
Okay, not looking at it on an investment perspective. Just want to mention Keynes Tech has plunged another 6.5%. I am just going through some flashes that were on CNBC TV 18. I think the management was there and they have said that all the transactions are mentioned in the profit and loss statements and there are no mistakes in the balance sheet. And they've also mentioned that there has been a delay in collections which they expect to normalize by the end of this year. And they have also mentioned that they will turn operating cash flow positive by FY26 end, but no respite for the stock, so to say. Another 6% plunge coming in a matter of 2 sessions. It has shaved off almost 13% from the stock price. But let's shift focus to some other queries as well. Since it's a truncated show today, trying to get as many addressed. There's a query from Satya CK for you particularly. And he's mentioned that you're his favorite, Raja. He wants to know your thoughts on Suzlon and Exide. Any thoughts? He wants to actually ask you, is it a good time to accumulate both? And his time horizon is 6 to 12 months.
All right. So thank you for the acknowledgement. And Suzlon right now, like I always say, that there are better stocks than Suzlon. So first of all, I would say that don't invest. And if you're invested, then exit it, but definitely do not accumulate. So that's for Suzlon. And as far as Exide is concerned, Exide, yes, it is going through its paces. It's going to take some time, and but I'm sure that amongst the auto ancillaries, as far as Exide is concerned, it is going to take some time to step out of the current situation. And it's been almost 6 months, almost the entire year it has spent in this particular phase. So I would say that yes, if you are holding Exide, then your risk should be around 340. Below 340, you should not be holding Exide. But this is also not a point to accumulate yet. I would say that point of accumulation will emerge after 410.
Okay, that's the view on Suzlon and Exide. But with that, I'm afraid we'll have to, call it a day. Raja, thanks a lot for taking out time and joining in and sharing your thoughts. Look forward to our next interaction as well. And to our viewers, if you couldn't take up your queries, please keep them coming in. We'll try and take them up on Monday. Thanks, Raja, for joining in. On that note, take a look at the market. Real estate, auto, PSU banks, all of them are now in the green, and so is the Nifty Bank Index. Ahead of the policy, some bit of reversal. Real estate had opened the day on a negative note, on a wobbly wicket, but now it's up almost 0.5%. PSU Bank Index has also picked up some steam. It's up 0.2%. Nifty Bank Index is off its opening lows as well. So positioning themselves ahead of the RBI policy announcement. On that note, let me bring on board our next guest for today. Joining me is Big Market Boys, Ambareesh Baliga. Mr. Baliga, thanks a lot for taking out time and joining in. We just have about 10 more minutes left on the show and 20 minutes for the MPC decision. First and foremost, what are your expectations? Are you in the camp that believes that 25 basis point is warranted, or would you say save it for another day?
No, I think 25 basis points is warranted. And I'm in the camp which is expecting that cut to happen. Although I think the street is divided 50-50. But I'm in the camp where I'm expecting the rate cut to happen.
All right. Okay, that's the view. But then, rate sensitives are in focus. Real estate pack has been, beaten black and blue, so to say. It's trying to make some recovery. If at all a rate cut does come by, would you look at real estate, pure play real estate stocks, or would you play this theme via, housing finance companies? How should one really position themselves in real estate, especially after the rate cut, given the fact that we've already seen quite a lot of correction in this pocket?
No, in fact, I would look at it from both the points. In the sense, I would look at the housing finance companies as well as the real estate stocks. But the real estate stocks, the ones more in affordable housing, because the rate cut does not really affect the luxury housing segment at all. It affects the affordable housing segment. So the companies which are more into affordable housing are the ones which I would possibly look at. And at the same time, housing finance companies, again, most of them are in the affordable housing space. In the sense, the loans given are more in that space. So housing finance companies also should benefit out of this.
Okay, all right. Affordable housing, that's the theme really to play. But what about banks? In fact, banks actually have been lacking conviction. The Nifty Bank Index, of course, hit a record high, 60,000, etc. But since then, it has cooled off. And for the PSU banking lot as well, there has been some negative news flow when the government has said that they are not looking at, they don't have a plan to, proposal for an FII limit hike or even a consolidation plan. They've denied all the reports. Since then, we've seen some correction in PSU banks. And of course, if a rate cut does come by, it could further pressure private bank margins as well. In the light of all these factors, how should one approach banks?
No, I would still look at the PSU banking space. Like you rightly said, most of these banks had moved up on the expectation of a FPI hike to about 49%, which the government denied. At the same time, people were expecting a consolidation to happen into about 4 or 5 banks. That again has been denied. But just like every management or company, whenever something is underway and they're questioned, they deny that. I think government also has done the same thing, because I think consolidation has to happen. It may take another 12 to 15 months, but finally that has to happen, because you need to have those 4 or 5 large banks. So I would possibly utilize any of this correction to get into the PSU banking space, because whatever said and done, you see the way balance sheets have changed in the last 2 years. Clearly, quarter on quarter, you're seeing better earnings. So I think PSU banking space is the one to be in.
Okay, PSU banking space is the one to be in. Also the fact that, since we're talking about, rate sensitives and policy related stuff, you mentioned, of course, you're on the camp that expects a 25 basis point rate cut. But if at all one doesn't come by, do you expect any kind of a knee-jerk reaction, or do you think that the market will take it in stride? It won't really be a surprise, as the rupee has taken such a sharp knock. Perhaps the market would be okay either ways. Is that the thought?
No, I think there can be a small knee-jerk reaction. I don't think it will be a major one. Because whatever's done, the cut we are expecting also is a very small one. We're not talking about 50 basis points, we're talking about 25 basis points. So if it doesn't happen yet, then we'll have some sort of a knee-jerk reaction. But I think as far as the markets are concerned, the pain is somewhere else. It's not in the index. the pain is actually in the mid cap and the small caps because
Mid
most of the
caps.
portfolios are
Yeah.
bleeding. Yeah, most of the portfolios are bleeding, despite we being close to. I mean, we have seen a new high recently, and we are still close to that. But losses the portfolios.
Okay, of course, expect some kind of reaction, of course, and I think mid and small caps will be more vulnerable in that sense. But talking about the rupee itself, such a sharp fall in such a short span of time, but that's
Right.
been a blessing in disguise for IT. Look at the way it has performed in the last 2-3 sessions. Good time to relook at some of these large cap IT names.
No, I mean, I would still wait for another quarter or two more to really get a, clear view as far as at least the next 2 to 3 years are concerned. Because I mean, rupee is clearly a short-term sort of a gain, or at least a sentimentally positive for this IT companies. But then within a quarter or two, I mean, it actually flattens out. So I think, I mean, these stocks have moved just because they had corrected decently well. And this is a sentimental boost, so because of which we have seen that move. I don't think that will continue for too long.
Okay. That's the thought. Anything else that you're liking at the current juncture, Ambareesh? Reports are suggesting that a US team will be visiting India next week, US trade delegation for trade talks. And of course, dates for the bilateral talks are in course of being finalized. And of course,
Right.
both the sides are hopeful of inking a deal by the end of this month itself, which is end of 2025. Anything that one should really be mindful of, any sectors that one should take position in anticipation of the deal? How are you looking at this whole, trade scenario panning out?
In fact, we've been expecting that for too long. In fact, we were talking of the trade deal by November end. Then we said possibly beginning of December. I mean, I doubt whether it'll even happen till the end of December because typically, I mean, post mid-December, most of the people are on leave, and this also applies to the government officials as far as US is concerned. So even if it happens, I think it'll happen sometime in January. And again, I'm still hopeful. And this will clearly, I mean, benefit the sectors which are affected the most when the tariffs were announced. And one of those sectors would be textiles, where I think we can see a decent
Yes.
move up on this announce. But I think more important than that would be the overall sentiment. I think that's what we've been expecting for a long time. And as and when the trade deal happens, possibly you'll have the small cap and the mid caps performing, which haven't, which have, I mean, badly underperformed till date. And along with that, I mean, if we have the Q3 earnings surprising on the positive, just like I mean, the way we had the Q2 earnings, again, Q2 earnings surprised on the positive because expectations were low. Now, Q3 also, if it
Yeah.
surprises, that can turn the markets. And along with that, you will have the pre-budget expectations and rally. So hopefully, I think January should be a better month than what we have seen in the last 2 or 3 months.
Okay, January, expecting January to be a better month, but in terms of foreign flows, November, in fact, this whole year hasn't been great. November as well saw, outflows to the tune of $1.3 billion. And December has also started on a distinctly bearish note, right? Because FIs have offloaded more than $1 billion in just the first 4 trading sessions. Do you
Absolutely.
expect any kind of reversal if a trade deal comes by? And also the fact that there are concerns about an AI bubble in the US, right? Can India emerge as an anti-India, anti-AI play? And as FIs look to diversify from AI, could India then be back on the map?
No, that could be possibly in the medium to longer term because I mean, in case we have the AI bubble bursting, I mean, which was expected about a month back, then once the Nvidia earnings were better than expected, we saw things coming back to normal. I think people will be waiting for the earnings in February for Nvidia to see as to what happens. And in case, I mean, the bubble bursts, I mean, it will have an effect across all the markets. Although India is not AI centric, but still, it will have that ripple effect. And post that is, I think, when investors may look at India as a value play. And by then, if we have the rupee again consolidating somewhere, I mean, it has to settle somewhere, whether it's 88 or 90 or 91. Once we see that the rupee is stable at a specific level, I think that's the time FIIs may again come back.
Okay, rupee stability, a lot hinges on that as well. But tell me one thing, last question. Do you expect the governor to give us any color on the rupee fall as well? Because traditionally, I think the RBI governor doesn't really talk a lot about rupee in policy, perhaps only like a predetermined statement. But today, since the way the rupee has crashed, do you think he'll make some kind of a statement, or he would give us some color on the future trajectory?
I doubt. Traditionally, they have never really commented on rupee and the levels at which the rupee should stabilize. So I don't think they will. At least the governor, I don't expect him to comment on the rupee at all.
Okay. All right. Okay. But I think in the press conference, all the reporters will be posing that as the first question to the governor. I'm pretty sure of that. But let's see how he tackles that. But Ambareesh would like to thank you for taking out. Would like to apologize. It's a truncated show. We just have the RBI, governor's address starting in less than 15 minutes. So we are ending the show a bit early. But thanks a lot for joining in. Always a pleasure chatting with you.
Thank you.
Thank you. On that note, before we wrap, take a look at what the markets are doing. Extremely flat, but the Nifty is now above that 26,050 mark. Very flat, 16 points up. Mid-cap index, continues to be on the downward trajectory. It's down 0.2%, and the breadth once again extremely weak. 2:3. That's an NSE advanced decline ratio. Nifty Bank Index, as I mentioned, has edged back into the green. Good comeback from opening lows. It's above that 59,300 mark. And if you look at the sectors, as I mentioned, IT on the back of the rupee weakness, IT has been gaining, and today as well is the top sectoral laggard, only gaining traction, up 0.5% now. Realty, PSU banks, autos, all these three rate sensitive sectors are trading in the green ahead of the policy. So yes, less than 15 minutes to go. Let's see what really happens. We'll of course get you live coverage on Moneycontrol. So stay with us. 10 o'clock governor's address, and after that 10:30 I'll have a panel of experts to decode the governor's announcements as well. So don't forget to tune into that as well. But with that, timed out. Thank you for watching. Stay tuned to Moneycontrol for all your other news and updates, and have a great day.